Hello everyone, welcome to this video again. My name is Daniel Debomo and this is the fourth video in the series of our training. This is the Forex Trading Made Easy Academy, and in this training series I'll be walking you through the process on how to start a profitable Forex trading business. Okay, I've given you 3 videos. You can check them out in the description section of this video. The links are available there. Please don't forget to hit the subscribe button, hit the share button, and also hit the notification bell so that you also get to get other videos when they come up. And don't forget to share these videos with your friends. They are completely free. Tell them to join our academy so that they can become part of our private signal group. Okay, now we are starting out this whole process. We've not gone in details anyway, but we're trying to walk through the basics. So if you're someone who has zero knowledge on the concept of Forex trading, this is a practical guide. I would help you do everything you want step by step. So we are still in the first phase of the whole training, which is the basics. And in the last video, I talked about pips and I talked about pipettes, okay? And then I talked about that there is a standard which currency pairs are quoted. You can quote currency pairs, which is usually the 4-2, but there are some brokers who would actually take it a little bit further, and then they would do it 5 for major currencies and then 3 for minor currencies. And all of these, we've had a very broad discussion. So if you are still confused where we stopped, please go and see the previous video and then you come back to see this video, okay? If you are still confused, you go back and go and see the previous video and then you come back and see this video. Now we're going to continue. In this video, I'll be talking about how you can identify a pip or pipettes, okay? Now, here is one thing you must know. In this section of my screen on my slides, you can see that the last 4 digits after the decimal points, they are known as what? As the pips. So for instance, on my screen here, I'll be talking about how to easily identify a pip or pipettes, okay? Now, these particular digits you're seeing here, the numbers after the decimal points, they are known as what? As pips, okay? Most times, the usual standard for major currency is 4, while for minor currencies 2. But in this case, the particular broker we are using, the standard the broker is using is 5, and this one is 3, like I told you in the previous video. So look at this now. We say this particular trade, the quote currency pair is 1.11110. Okay, so and then if you see it, when it moves up in the trade, you got 1.11120. So you can see that it moved by a difference of 10 units. That is to say that what? It has moved by what? By 1 pip. Okay, these pipettes, the pipettes here, it was 10. Now the pips you're having now is what? Is 1 pips. Okay, now if it should move by, for instance, you have 1.11120 and then you have 1.11220. So it has moved by 100 pipettes. And this will say that what? Since it has moved by 100 pipettes, now you have what? 10 pips. So if there are 10 pipettes, it gives you what? 1 pips. And if there are 100 pipettes, it gives you what? 10 pips. So that is how it is being measured. I don't know if you understand. I'm trying to see how I'll be able to break it down. But there is what you should know. If it should move by 10, you get 1 pips. If it should move by 100, you get 10 pips. You get it now? So that is the instance. If you have 222, which is this particular figure, if we are to move it again, and let's say the next thing we have is 330, it has moved by what? By 100 pips. I used to say that what? It has moved by what? By 100 pipettes, sorry. And now you're having what? 10 pips. Do you get it now? So that is the logic. But I will try to explain all of this in details when we start going through our chart, and then we'll start observing the difference in all of these. But I'm just trying to be theoretical about it, and it's a little bit complicated unless I start using illustrations, diagrams and charts and stuff like that to actually show you. But in the course of the training, I will walk you through all of this. Okay. Now, having said that, the next thing we talk about here now is most brokers show 5 digits except for yen pairs to identify a pip for a yen pair. So you go for the second digit after the decimal point. So most brokers shows 5 digits for yen pairs. Now, to identify a pip for a yen pair, go to the second digit after the decimal point. That is to say, okay, when we start trading, I will explain all of this, because I think if I just start talking and start explaining now, it will be a little bit complicated. So let me just pause for the time being. How to know the value of a pip? The value of a pip is determined by the lot size you use. The value of the pip is, so now another time again, that is still a little bit complicated. That will still get you confused, but you will start understanding all of this when we start doing real practicals on how to trade. Is the term lot size. Now, what is the value of a pip? Now, if I made a profit of 10 pips and use a lot size of 1.00, it means that what I made $100 on that trade based on my size. However, if someone made the same amount of pips as me, that is the 10 pips I made, they could have made more or less depending on what, on the lot size they use. So understand these words now: pips, pipettes, lot size. Okay. There's a word called trade volume before that I made reference to in the previous video, but all of these are things that we will start fusing together when we start doing what practical strategies on how to start trading effectively. So for the time being, don't just try to put all of this at the back of your mind, and then when we start using charts, start doing illustration and technical analysis, all of this will start coming into light. The reason why it's a little bit now confusing is because we are not trying as much as we can to practically illustrate what we are doing. That is just it. So the next thing we're talking about now is, what is a lot size? The number of currency units you buy to sell is called a lot size. The number of currency units you buy to sell is called a lot size. There are standard lots, there are mini lots, there are micro lots, there are nano lots, and pips are always the pip is always calculated in dollar. So this thing is very simple. So I'll talk about pips, I'll talk about pipettes, I'll talk about lot size now. So when somebody tells you lot size, if you are trading, it simply means that what is the number of units you buy to sell. Remember, I told you in the beginning, I said that when it comes to forex trading, you're buying one currency while you are simultaneously selling the other. So you have to have this at the back of your mind. You have to ensure that you understand what it means, what it entails. Okay, because you're buying to sell, and there are different types of lots. This includes standard lots, mini lots, micro lots, and nano lots. Okay, and there is a perfect description of it. Let's look at it now. What is a lot size, and how can you calculate lot size? This is how we're going to be doing it now. Now, you're seeing lot size, you're seeing unit, you're seeing volume, you're seeing pips. Now, for the standard lots, the unit is 100,000, the volume is 1.00, and then the dollar pip is $10 pip. Okay, while the mini lot is, the standard is 10,000. The unit, sorry, the mini loss, the unit is 10,000, and then the volume is 0.10, and then the pip is $1. Then the micro lot is 1,000 units, and then the volume is 0.01, and then the pip is 0.10 cents per pip, and then the nano lot is just 1.00 unit,